Okay, good afternoon, everybody. Good afternoon. Welcome to Paul's Monday Market Update, number 213 for Monday, 2nd of February, 2026. Hope you're all well. Hope you've enjoyed a good weekend, and yeah, hope you're ready for what's going to be another interesting week ahead. Great to see you here, Sean. Thank you. You're all welcome. Um, as always, okay, as always, it's great to have you here. As I said, it's been a rather eventful weekend, hasn't it? It's going to be an eventful week ahead. If you're joining us for the first time, the Monday Market Update is just that. It is me flying through as much as I can squeeze in the next 25, 30 minutes, looking at strength and weakness within FX markets, looking at the some charts of interest, and then looking at live markets. It is not a signal service, it's not trade recommendations, it's just what I'm looking at, which may be of interest or use to yourselves. And as always, you are very welcome here, but just remember, you're always responsible for your own trading decisions. If you want a bit more education this afternoon, I'll be running the Active Trades Monday Market Matters webinar at 2 o'clock London time. The educational element will focus on using Fibonacci in our trading. You can register for that on the Active Trades website or use that QR code to take you there. And also, it's the final call for the Q1 Dollar Edge FX swing trading mentorship. So, if you want 8 weeks of swing trading mentorship as part of a small group, then you're welcome to join that. That's what starts this week. You can ping me, okay, for if you've got any questions, or once again use that QR code to give yourself some insight. All right, let's dig into the main element of our session today. As always, as I said, we start off with taking a look at the basically the strength and weakness within FX indices and commodities markets. If you're new to trading or if you're new to joining us, perhaps this might look a little bit intimidating or overwhelming, but it's not that hard once you get to understand how we put it together. It's just clips out of my own STAM model that I do at the weekends, with the whole idea being to give me an idea of where's the strength and where's the weakness within FX and indices and commodities markets. So, what is this telling us? How is it helping us? Well, we are into the sixth week of the year already. Okay, for the 2nd of February, where's the strength and where's the weakness? We still see, okay, Aussie dollar at the top of the pile, and on a longer term basis, Swiss franc remains still in second place. That's where the strength is there. Okay, looking at the weakness, we still have Japanese yen sort of propping up the base, and also US dollar. Now, of course, the sort of US dollar had a bit of an interesting week last week. Of course, we had all sorts of news coming out. We had some big companies' earnings reports. We also had the sort of issues with the silver and gold markets, precious metals in general, and also Trump announcing the next head of the Federal Reserve. So there's lots going on, which provided lots of volatility, and we'll have a little bit of a look at that when we switch across to the live markets later. But at the moment, okay, the dollar remains there in the sort of the bottom part of the strengthy weakness, and we'll see whether that continues. Certainly looking at how the market started this week, okay, and certainly everybody was interested in that after the events of Friday. Intriguingly, what we saw was a continuation, as we'll look at, a bit of a continuation in sell-off in those precious metals through the Asian session last night. But then we had a little bit of a turnaround this morning, and I'd say the market's a little bit mixed. We're kind of waiting for those sort of that US markets to open. We've also unusually got some big data this afternoon. Okay, in terms of we've got manufacturing PMIs coming out of the US. I think at checks notes, yeah, 3 o'clock. So there will be that as well to provide a little bit of spice for the start of the week. Certainly, when we look at the others and we look a little bit closer to home, Kiwi dollar still remains in third place, euros in fourth, okay, Canadian dollar is in sixth, and sterling kind of languishes its way down there in fifth. And what is of also relevance to me is that, when I look at sterling in particular, what I see in terms of my standard trading environments, they have all switched from starting the year where there was a fair bit of a bullishness in sterling that has kind of evaporated and disappeared for the most part, right? And most of them are in selling environments for sterling. Okay, and that's what we can see there. When we look at indices and commodities, if you joined us for the last few weeks, remember it was pretty much all green the last few weeks, and as I said, always a kind of it's always at its most green and giddy just before the rollover. If we look this week, an awful lot of those American indices, the momentum has changed. And that's, as I said, due to varying but various bits of news over the last week or so that has basically, I think, probably sort of taken the sort of wind out of the sails of not only some equities, but also the indexes, but also a few of those precious metals and other commodities as well. But we'll look at that more in a moment. Interestingly, oil sort of remains still as a strategic buy. ASX still strategic buy, Nikkei and FTSE, along with Nasdaq. Although, as we said last week, Nasdaq has kind of it has lagged a little bit compared to the other three major indices, but we'll look at that in a moment. Certainly, we've got another busy week ahead. Okay, there's quite a full week in terms of earnings reports. Just looking at some of the big ones, which we'll cover in a moment. You've got Disney today, you've got Palantir tonight. Tomorrow you've got PayPal, you've got Pepsi, you've got Pfizer. Tomorrow you've got AMD, you've got SMCI Supermicrocomputers Wednesday, Google, ARM, Qualcomm, okay, UBS. Thursday, Amazon, and Strategy, and a whole host of others. So there's a lot to come out, and we'll look at that moment. And of course, that will also give us an indication of the overall sentiment after the sort of last week's volatility. So plenty for us to have a little look at there with that. All right, so let's switch across to the live markets and start to have a look at a few of the charts of interest that we've got. So here we go. First of the charts of interest, okay, is UBS. As I said, UBS, okay, their date's coming out Wednesday before the market opened. Right, UBS, the major bank. This is the American listing, but it's still seen as a major Swiss bank, and it is still seen as being in kind of still in kind of integration mode post the merger or acquisition of Credit Suisse. And so the kind of focus has always been on sort of capital strength, wealth management stability, cost discipline, etc. But nonetheless, if you look at this on a weekly chart, it has been for the most part pretty much in a pretty good solid weekly trend there, hasn't it? For since the sort of Liberation Day Trump tariff tantrums, all right, taking us down here sort of $26, and we have now been tickling the sort of soft underbelly of $50 there. Okay, so yeah, a really kind of nice pullback, a nice bull flag there. Okay, just you can see that there nicely. But interestingly, last week, kind of as you can see there, that's what I would term as a kind of a bit of a momentum reversal, kind of a push to a new high, but closed beneath the close of the previous week. Okay, it's a bit of a bearish rejection candle there, and so I'd be looking at that as is that a case of UBS basically sort of taking a bit of a hit due to the sort of ongoing volatility, or is this just a bit of profit taking in front of the news this week? The thing about UBS and all of these kind of major banks is, of course, people are interested in it because they sort of see it as almost like a proxy for sort of systemic risk. So if there's any kind of shift in sentiment or banking stress or regulatory headlines change, well then that's likely to have an impact on, in particular, those kind of the banks and the overall sort of financial sector. But certainly at the moment, that has been a pretty great trend, I'd suggest. There, it's pulled a long way away from its moving averages. So I'll be curious to sort of watch this. As I said, they're out the Wednesday before the open. All right, does it? Are the numbers good, and is the sentiment overall good that it can push us back up towards $50? Well, I'd say that's probably the magnet we're looking at, or will it just basically be a bit of profit taking? As I said, it has extended a good way away from its moving average, and you'll be looking at, well, is it going to sort of, will it kind of hold above $47? That's what I'd be looking there for UBS. Next one is Amazon. So Amazon is their earnings are Thursday after the close. Okay, so what do we know about Amazon? Well, everybody sort of kind of would be able to tell you that that kind of growth in this sort of AWS that's kind of stabilized, and now everybody's looking at can they expand that margin? All right, okay, that's the kind of story they're looking at. On the sort of Amazon retail side, well, it is really all about discipline in terms of kind of cost controls and logistics efficiency. All right, that's the sort of thing they're looking to see. Is that going to show any kind of profitability after years of investing in that kind of side of the business? And not unsurprisingly, over the last couple of years, there's been lots talked about their capex in AI and their investment in AI. But really, you're looking in terms of the returns on that. You're looking at kind of like long dated returns in that. So that means all the kind of the sort of near term expectations are a bit sensitive. So Amazon, if you're looking at it in terms of fundamental play, people are now looking at it kind of its operation leverages, its kind of commentary on its margin more so than pure revenue growth. Right, those kind of expectations matter more at the moment. When I look at the chart here in front of us, I look at the price there. Okay, yeah, do you know? Yep, it has been in a upward trend, and yep, we have that kind of Liberation Day sort of pullback, and certainly we've pushed high from there, but I wouldn't exactly say it has been a beautiful trend. Okay, there has been hiccups along the way. Certainly, what I would look at as a seeing is that we made this kind of pop to $250 there. Okay, sort of latter half of 2025, but we just did not get above it at all. All right, and then the 50 has acted as good support, okay, and we've popped up again, but I wonder now. I would probably see as $250, all right, and the 20-period moving average we're a bit squeezed beneath there. You might say, well, Paul, is that not just a little sort of double top you have there playing out there with that rejection candle as possible? Once again, it might just be a bit of profit taking there in front of the sort of earnings on Thursday. What I'd be seeing is for me, if those numbers are good, and everybody's happy and we're back to giddy life, well, I need to see us book $250 and holding above there in the weekly chart. If those numbers are poor, and that actually this rejection candle is giving us some insight, well then, certainly $230 with a 20, and then down to sort of a 220 with a 50, as that's where my drift would be. So I'll be watching that to see how that plays out later on this week. We've also got Alphabet or Google, all right, for those of a certain vintage going on through there. So that's what we're seeing there. Google, they have got their earnings after the bell on Wednesday. When we sort of look at that, all right, same as Amazon in terms of the kind of, let's say, the kind of the core balance work, or the core element of the business, all right, so advertising, etc. That's all doing well, but everybody's focused on AI, all right, in terms of how much are they spending on it, and actually are they in a position to monetize that properly? And I suspect there is all sorts of competitive pressure in terms of the AI search, and and the kind of, I'd say the whole arena has shifted from kind of Google being almost like untouchable to now people focusing on how well they can execute their plans. So Google, along with all of those companies, they're a bit vulnerable to sentiment swings around the kind of AI narrative. And so even if, as I said, the advertising remains strong, everybody's sensitive to sort of kind of AI and what's going on with that. But when you're looking at that price, once again, that has been, when we just looked at Amazon, which has kind of, is ground its way higher. That has not been the case for Alphabet, right? The sort of tariff tantrums took us down to that $150 area, and it's just been a fantastic journey there. As a kind of, a little bit of educational learning for the traders, as I said, I'm always curious about what happens, when price gets, how it reacts to sort of big round numbers, all right, when price is getting at edges. When we got to 200, right, just in front of the tantrum, we printed a nice big bearish engulfing candle, a big bearish Q reversal candle, worked our way down there until it ended there. When we got up to $300, we actually gapped up above it, but what I kind of liked is we came back down, filled that gap, and then basically flip 300 from being resistance to support with a pin bar and have worked our way higher from there. Okay, and that's just continued. And so, yep, last week we traded a little bit higher, okay, in terms of that. And we also had our kind of highest weekly close. So, everybody's still bullish on that. It'll be a case of that, will the numbers support that continued sort of bullish move? Certainly, I don't see any kind of crack in the structure or anything like that there. If the numbers were, desperately poor, or if we get more sort of kind of bad news this week, well, then certainly 300 becomes my kind of line in the sand there, where the sort of 20 period moving averages. But at the moment, I'd still remain kind of bullish on that. There's nothing there to sort of tell me the opposite, okay, in terms of just looking at the price action on Google itself. All right, next one here is a MicroStrategy, or as they've recalled themselves, strategy. This is kind of an interesting play for many, many reasons. All right, you could talk about this all you want, but really, I would suggest that most traders and investors see this as kind of a bit of a leverage Bitcoin proxy. All right, with the actual operating business strategy, that's kind of almost like secondary. Can anybody really sort of tell me what strategy being involved in? All of the news focuses about their exposure to Bitcoin. And so, of course, what we saw here is, when Bitcoin was on a tear and Saylor was buying everything he could, well, then, of course, he looked like a genius. Now we're back down to around about $150 here. Well, suddenly, that doesn't look so good. And people smarter than me and more sort of academically adept than me will sort of tell you that actually where Bitcoin is at the moment, sort of, trading sub 80, sub sort of around 75,000 area, actually it starts to make his acquisitions, they start to get underwater, and that starts to have, negative implications across a broad range of themes and narratives. But what we're looking at is strategy. It's these people are trading they're trading volatility, not the valuation, all right. And so the way I look at it is that when we topped out there, okay, that has been one way trend there, hasn't it? And we're down here to the kind of weekly 200, and so my question is, $150, 200 period weekly moving average. We spent time pivoting around $150, all right, not that long ago. And my question is, is it going to find support here? Are we going to find support, okay, before we make a move there? If you're looking at the Bitcoin price right this moment, perhaps not. But then equally looking at, well, if it breaks, does this sort of start a kind of a further domino down towards that $100 because people start to see that Saylor is not the kind of genius that everybody thought he was, and that everybody just wants to jump on the bandwagon. Some might say that they've already kind of jumped on that bandwagon, all right? So, he is his feet are taped to the pedals on this with regards to taped to Bitcoin's pedals, and so as Bitcoin has faltered, so has strategy. Okay, so of course, everybody will be here interested to hear what he's got to say on Thursday as part of their earnings release. And finally is Palantir, which I think we looked at a couple of months back. All right, this is the weekly chart of Palantir Technologies. They have got their earnings this evening after the close. Palantir is an interesting company. All right, so they kind of position themselves as a tech company, as a bit of a data analytics provider, especially in kind of government and defense. But increasingly, they're kind of looking at or being viewed as a bit of an AI execution platform. And so, of course, the fact that they have been involved in AI has been one of the many elements that has basically seen this fantastic run here, okay, over the last 18 months or so. We really ran up there, and it's been a great trend. And when we spoke a couple of months ago, this was here once again, big round number, 200. What did we do? We printed, a bearish engulfing candle, bearish key reversal candle, price pushed to a new high, but then rolled over and closed beneath the low of the previous candle on the weekly chart. And then, we kind of provided a lower high here, a lower high. There's some might be saying, well, that's a bit of an ABCD pattern that's playing out there. Once again, I'm interested here because, not only have we got earnings, but, here we are. We're at $150, which is also the weekly 50 period moving average, which we have not traded below for a very long time. Okay, we've not traded below. So once again, will the numbers this afternoon, all right, or this evening rather, for us here in the UK, will they be enough to give it a sort of a 50-period moving average bounce up to the 20, up to $170? Or will the kind of numbers and general sentiment be weak enough that 150 and the 50 can't hold? Because if it doesn't, well, then I'd be saying, you're kind of maybe looking at like 120. That's what I'd be sort of viewing in terms of, does it crack and drop to 120? So, it's at a decision point. That's the way I view it. And that's when I'm interested, when prices are extended, all right, or when prices at significant levels, or it's at a decision point where it's likely to make a decision on its future trajectory. And, sometimes that is very, very clear what it's going to do. Other times it's not. When it's not, I just let the market play out and then try and ride afterwards. Okay. And so, the question is, will earnings be the catalyst for Palantir's next move? Hence why it's on our list to watch and shoot, ladies and gentlemen. All right, there you go. So there's the sort of charts of interest for the week. Hopefully, they can add some of them to your watch list, see how they play out this week. But let's have a look at the sort of main indexes, etc., and the live market. So this is an indices profile here. Let's just make sure that you can all sort of still see. Hopefully, you can still all see and hear and everything. Yeah, just checking that. So what have I got here? Dow on the weekly, NASDAQ on the weekly, S&P 500 on the weekly, Russell on the weekly, FTSE on the weekly, Nikkei on the weekly, DAX on the weekly, and oil on the weekly. Is kind of let's just have a little bit of a look at oil, because of course, and what we have seen is, of course, the big shifts lower in gold and silver. But actually, over the last week or two, we saw big moves over in oil, getting up above that 50. But then actually, it's interesting that start of this week, we've kind of drifted lower already. Okay, now is that a case that people don't think they're going to Trump is not going to sort of strike Iran this week? Maybe. I would suggest, and this is probably just me being a cynical old duffer, that basically, if based upon some of the rather salacious emails and photos that were released over the weekend to do with the Epstein files. If you wanted to distract people from digging too deep into that, well then a little bit of a war somewhere else is not a bad distraction. But looking at the oil price there, that would maybe, I would assume that perhaps I'm wrong. The kind of if people are expecting that, we'd probably see oil sort of continue to rally much higher. But that isn't the case it's not the case at the moment. But let's have a look at those indices. So, I kind of said here a couple of weeks ago that we'd had Dow start the year pushing to highs. Okay, we'd had S&P start the year pushing to highs. We'd had Russell, okay, starting the year pushing to highs, but not on the Nasdaq. The Nasdaq was kind of, I looked at that, it's kind of coiling up there, right? And we were waiting, I think, for some of the Mag 7 data earnings to come out to sort of give us an indication of that, to give us a bit of a sense of what's going on. The way I look at it is that we are still beneath that kind of all-time high, even though last week we did try and push higher. We are still above the weekly 20-period moving average, which is still for the moment acting as dynamic support. I still see us as kind of like, this is a bit of a coil. And the question is, will the kind of likes of, Google and Amazon, Strategy, AMD there tomorrow and stuff as well, will those numbers be good enough to basically to break it out of this coil and push it high to new highs? Okay, that's what people will be hoping for. Of course, the other alternative is that actually, with everything else that's going on in the world, sentiment just basically takes a bit of a knock, and we see the Nasdaq sort of drift its low. And as I said, I'm kind of watching that sort of weekly 20-period moving average to act as a level of dynamic support. All right, is that gonna do it and turn us into sort of an ascending triangle, or as I said, is it coiled up and are we ready to sort of break out from there? So that's what I'm kind of, whilst I'm interested in the individual equities, I'm also very keenly aware of what's going on with the indexes themselves. Even Dow, I would probably say Dow is now looking like it's coiling. Look at those last couple of weeks; they're pretty much, sort of, doji sort of indecision candles there, and that's probably just, a sense of what's going on. Maybe they're kind of hoping that the earnings will distract people. Maybe they'll basically hoping that other stuff going on will distract people. but I would probably suggest that that is now looking like it's coiling up and waiting for what's going to be the catalyst. And remember, we still have a full-on week of stuff going on here. There's still lots of economic data coming out. The Aussies are likely to hike rates tomorrow. Okay, we've got Thursday, Bank of England. They'll probably keep the same. We've got ECB. We've got non-farm payrolls on Friday. Okay, so there's still plenty of data that could provide that shove in the right direction. But when I look here, the Dow, we just looked at it, the weekly sort of indecision, the daily chart, for January, that's kind of, some might say, well, isn't that kind of a bit of a rounding top, Paul? Sort of here we go. Let me just draw that in there. I promise you I'm a better trader than I am an artist, but you get the idea. But once again, I'll be looking at, is this daily 50 going to continue to act as support? Okay, if it does, we push high. If it breaks, well, then we move our way low, and I think that's pretty much across those boards there. Looking closer to home, let's have a little look at DAX. Bang, we pushed up and we've just rolled over, but we still stay above the weekly 20. Yeah, we're still this level here, this kind of 24,700. All right, still acting as a variation of support. There we go. The daily 50. The daily 50 has acted as support there for the last couple of months. This morning, even though we sort of fell down on the start, we've kind of rallied our way up here. It's looking like it might even turn into a bit of a morning star formation there. Okay, and that's that we'll see how that ends there, right? But definitely at the moment that 50 continues to act as support for the DAX. Looking a little bit close to home, FTSE continues to work its way higher. Okay, it continues to sort of push itself there, and in fact, actually today, we've actually pushed. We might actually close at highs there. Okay, admittedly we've got a couple of hours left, but I think part of that would be, I think we had the kind of final bits of PMI data and stuff, didn't we, coming through, and they were okay. And stuff. So that's kind of what's the word? It's kind of almost operating like a safe haven with all the volatility that's going on elsewhere. But it's staying above the daily 20 there. All right, staying above the daily 20. It's still bullish there as far as I see it. But then if we look at a couple of the big ones which people will be interested in, gold. This is the weekly chart. Look at that, 5,000 that was last week. And look how we started this week. We fell all the way low, but we've kind of come back here. I'm just going to go into the daily charts here. In fact, maybe let's go down a little bit lower, the 4-hour charts. Okay, we can see, how we kind of rallied up there Friday and we just collapsed our way and we started off today and fell down, but we've kind of rallied back a little bit higher. That's kind of an interesting rally, as I said. It's we kind of, this is the 1-hour chart now. We kind of opened, gap down and rallied, but then as we came into London, we've kind of had a bit of a turnaround there. Now, the thing is, can that carry through in the American session? Back up to sort of 5,000, that would be, I'd say that's a strong recovery, or is this a bit of a dead cat bounce? We will wait and see how America how America defines that. Okay, but certainly, that was quite some fall, and the bounce has been significant this morning. Silver, pretty much the same. All right, if I look at that on the weekly chart there, that has printed, that's a weekly engulfing candle. All right, it's a weekly engulfing candle. It's also in a key reversal, could be pushed to highs and then close beneath the low of the previous candle. If we go down to that daily chart, we fell down to the daily 50 where we bounced off nicely a couple of months ago. We'll go down to the 4-hour chart. Okay, we kind of came our way down there, dropped, but a little bit like gold, as in we kind of continued selling through Asia. We kind of flushed out Friday's lows and then reversed off it quite nicely, didn't we? We reversed off it really nice. That's what I'd call a trident there. The way I look at that, and that's a nice flush, and it's worked its way up. And as I said, we're back up above 80. Will the American session, will that continue, or is, as I said, is this a dead cat bounce? We'll find out this afternoon, I suspect. Okay, so we'll be watching that. And then, of course, that goes with Bitcoin. We looked at strategy, and you can see how, the kind of the sort of drop from that peak of 126 down to, where we've traded as low as 74,000, 75,000. That's almost like the strategy price action that we just looked at there before, isn't it? So I thought at the start of January, we might get a little bit of a pump higher. I thought, we were just breaking out of consolidation, pushing, but that didn't last. Look at the rollover there. Look at the rollover there. And today we've had another flush, okay, a bit like silver there, isn't it? Flushed down, and then we've worked, that's a kind of nice morning star formation at a break of liquidity there, and we've pulled our way back off of that. So, with that in mind, people are going to be looking at, well, what impact is the dollar having upon that? All right, what impact is it going to be based upon people's evaluations of the new incoming head of the Fed? What's what's he going to bring to the party? So, this is dollar. So, Aussie dollar on the 4 hour, Kiwi dollar on the 4 hour, Euro dollar 4 hour, dollar CAD, pound, dollar yen, dollar Swiss, and of course, dollar index. Let's have a little look at dollar index. Because we're over on a little bit, we'll look at dollar index and sterling to finish today. So, let's have a little look at dollar index as always. I talked about this a couple of weeks ago, how price was in between the 20 and the 50, which was coiling up. I got it wrong. I thought we might pop to 100. That's what I thought we might do, pop to 100 and see what go on there. But invariably, the kind of Greenland, Davos, the whole host of that just basically flushed us to those lows. Really kind of flushed us to the sort of 2005 lows. Look at that. There we go. And then, as I said, I'm always intrigued to see how we react at those kind of levels. And you can see, having had that really strong run, well, actually, we bounced off it quite significantly, didn't we? That's the 4 hour chart. We kind of bounced it today. Not that much, really. If you look at that, we're pivoting around the 50, but not, the price action there is not terribly, I wouldn't exactly say that's terribly exciting. I'd say that's probably people just sat there scratching their heads thinking, where do we go from here? What's the story? Where do we go? That is in a range. And so I'd be expecting to see what happens at A, US Open, B, after the PMI data. That's what I'd be looking for on the dollar index. Flip the side of that. Well, then, of course, we're looking at euro dollar. And you can see how euro dollar pumped to 120 there, and last week put in that kind of bearish rejection candle pin bar there at 120. Go down to the daily chart, maybe not pretty on the daily chart, but certainly the 4 hour, having pushed up, we kind of fell our way back to the 50, and like the dollar index, we're just pivoting around there at the moment, aren't we? We're waiting for the catalyst of what is going to be the catalyst that shoves us in a direction, whatever that direction might be. What is it going to be that shoves us in that direction? That's definitely what we're particularly looking for there. Dollar against Swiss franc, all right, because invariably, we've seen Swiss franc has been strong, all right, dollar has been weak, but that's what we saw there. But then once again, we kind of flushed the lows of 2005, and then you've got to look at, well, we bounced, all right, we bounced there, even with dollar supposedly weak and Swiss franc strong. We kind of worked our way high. That's I'd call that a kind of a lazy double bottom, nicely filled out by this bullish engulfing candle, okay, forming a higher low, and we've just worked our way up there, haven't we? Just worked our way up there, and there's definitely that dollar against that Swiss franc weakness, and as we saw right at the very first, I showed you how the kind of Swiss franc was weak this morning, and is that a case of SMB doing something, or is that just a general case of everybody got a little bit fearful, and now everybody's just relaxing a little bit, and we shall wait and see there, okay, on that dollar story. All right, and let's finish with sterling as always. So I've got cable here, pound yen, euro sterling, pound Swiss, pound Aussie, pound Kiwi, pound Canadian, and FTSE. All right, we've looked at FTSE already, and we've just seen what's been going on with US dollar. All right, sterling, as I said, has been languishing, and what we saw was this bump in sterling strength was really nothing really to do with the UK or sterling. That was dollar weakness. All right, that was dollar weakness, playing out across all of those major dollar pairs. But as you can see, and as we look down the dollar index and Swiss franc and euro, that basically is topped out there, and it put in a nice double top there. That's a nice 4 hour double top there, and we've worked our way down to just being around that sort of 50. So it's almost like, as I said, everybody's waiting, scratching their head, saying, well, where do we go from here? What's the story? And it's a case of, will there be some sort of data today, and not necessarily data, but will there be some commentary? But Trump or others and stuff that give us a catalyst for a move, or are we going to have to wait until sort of kind of major data sort of tomorrow and later on this week to give us the sort of shove? But that is yeah, just sat there on the 50. If you look at pound against yen, look at just look at the sort of volatility that we have there going on against pound against yen. I'd look at this as what I'd call diamonds. All right, I expect this to. We've got a broadening formation followed by a narrowing formation. Looks like a diamond, and it's almost like clearing out orders. All right, clearing out orders around above 210, and I'd say pivoting around what about 212, pivoting around 212 there. Okay, that's the way I would look at that in terms of it. That is trying to trade that as a swing trader, probably a little bit on the challenging side. Go down to the 4 hour chart. Lots of wicks there. All right, lots of wicks there, but not also not much conviction going higher either. It's not it's not the prettiest of charts there at the moment. Okay, pound yen. So I'd be watching that, but not actively looking at on the swing side. Pound against Swiss. Well, we had this is the daily chart. We had a beautiful pin to the 200 and drop away from it. And that was sterling weakness, Swiss franc strength. Swiss franc's second of the stand. But actually, as I said, started this week with Swiss franc being a bit weak on the weak side there. Okay. Right, you can see there how we've kind of just had that shunt there, that shove there. Okay. Certainly this morning intraday trading sterling was a bit dull. But the only big mover was pound strengthening against Swiss franc. I think a lot of that was just Swiss franc weakening across across the board there. Euro, now, of course, remember, this is euro sterling in that daily move down there. We're around about 200. Okay, we gapped down, but we've pushed up. Now, of course, as I said, Thursday, we've got kind of Bank of England and the ECB. Neither side are expected to make any kind of major change, but it would not surprise me if we just sort of maneuvered sideways until then. All right, that's what my view would be. This morning's that sort of mad price action is just the sort of the gaps on the open there against Sunday, but other than that, we had a big Asian range, and so actually we didn't really do that much in the European session, the London session. That's the way that's fallen through. With regards to the pound Aussie and pound Kiwi, well, you've got Aussie in first on the stand, Kiwi in third, all right, sterling in fifth. So no surprise that continues to sort of drift its way lower. Pound CAD has been a bit messy for us, all right, but then you might be said that pound CAD is always a little bit messy. Okay, let's draw it to a close there, ladies and gentlemen. I appreciate that we overran a little bit, but there's a lot going on and there's a lot happening this week. All right, so I hope you found that useful. Hope that's given you a little bit of insight that you can help and take away and utilize. Listen, it is going to be an eventful week. It's going to be a busy week for economic data, for earnings, and for a whole host of other things. So, as always, make sure you're on top of your risk management. Make sure you're on top of your news flow and order flow. Have yourself a great trading week, ladies and gentlemen, and I look forward to speaking to you soon. Many thanks, everybody. Cheers. You're welcome, Sean. Thanks for showing up.